All right. Hello, everyone, and welcome to Stablecoins Are Killing It, episode number 25. I'm your host, Lou Kerner, and I'm a crypto VC with Blockchain Co-Investors. And I started this show in April because I believe that stablecoins were poised to be the first $1 trillion vertical in crypto. And at the time, there was less than 4 billion in circulation, and today, there's more than $27 billion in stablecoins in circulation. Really amazing. So stablecoins are truly killing it. We've got a great show for you today, featuring Kevin Mehrabi from StableTech. Hey, Kevin.
How you doing, Lou?
And we also have a second guest, and I've got to bring him up here on stage. And that is, hold on a second. Our second guest is Lewis Frieberg. And let's see, Lewis, you're now a panelist. So welcome to the panel. Lewis, let's see. Oh. There we go. Okay, Lewis. We'll figure out how to bring you up as a panelist. You should be, but I don't see you here yet. But in any case, we're going to start the show as we always start out. There he is. Nothing's quick. Lewis, you want to turn on your camera, your video, and your audio? He'll get here eventually, I assume. Lewis is actually calling in from Andorra, which is a cool little municipality.
Yeah.
Yes, between Spain and France, I think. Kevin, where are you calling in from?
I am in Los Angeles.
Okay, cool.
I grew up in Philadelphia, though, or suburbs outside, and we had a little town. Everything there was named after Western European cities. So there was a town called Andorra. That's how I knew about it.
Hey,
cool.
How's it going? Sorry about
Welcome,
that.
Lewis. No problem.
Lewis.
So Kevin and Lewis are each going to walk through presentations for around 10 minutes, and we'll spend the remainder of the time in Q&A. So if you have a question, put it in the chat function at the bottom of your tab on Zoom. And if we pick your question, we'll let you know, bring you up as a panelist so you can ask our guests your questions themselves. As a reminder, the show is being recorded. Replay is going to be posted up on YouTube. And with that, I would like to hand it over to Kevin Mehrabi.
Thank you, Lou. It's great to be here. So yeah, my name is Kevin Mehrabi. I am, I guess, best known at this point for starting USD Tez, which is the first stablecoin on Tezos, first USD stablecoin, first fiat stablecoin, and we just launched ETH Tez, which is wrapped Ethereum on Tezos. So my background, just more about me, I've been living in Los Angeles for the past 15, 16 years now. Went to college at USC, UCLA for my MBA. Product manager by trade, got into crypto pretty early and escalated it over time. Hitched my wagon to Tezos, mostly because it really alleviated all the problems that I saw with backing another blockchain protocol, another smart contract protocol. Not that there were anything necessarily wrong with them technologically or applied at the time, but I saw a lot of hard forking. I saw a lot of separation, sectarianism, and I thought, okay, well, you know, if a lot of the reason why I knew others who were just staying away from backing any one project for different reasons, that was because everything's going to cannibalize everything else, and it's so early. Why get involved in any one thing so directly? But when I heard about the on-chain governance process of Tezos, the fact that this will always stay one united system, that all disputes are going to be handled within the blockchain, I realized, okay, well, this is that answer. I don't know if this is going to be the only blockchain left. In fact, I think we'll have many blockchains. There will be some major ones, but I know that this one will be around and united. So in going into ventures, and my background is in entrepreneurship, starting up ventures, consulting for them, that I realized, okay, well, you know, this is the thing to get behind. This is the thing to build on. And knowing that stable coins are killing it, of course, it's all about the stable coins. Stablecoins, I believe, are just when we talk about DeFi, we talk about anything economic on the blockchain, everything really starts with stablecoins. Not because they're necessarily the most innovative thing that you can have on a blockchain, not because they're necessarily the most exciting or participatory. You want participatory, you go CryptoKitties or whatever else, not to belittle that. No, there are plenty of financial applications that are very participatory. But because a fiat-backed stablecoin in particular gives everything else in DeFi some sense of an insurance policy. Not necessarily that people would use a fiat-backed stablecoin, but just knowing that it's there. It gives sort of a ripcord, an ejector seat, whatever you want to call it. And I'm trying to be very cynic friendly here, to use very broad accepted terms. But yeah, so, and from there you can build plenty of applications. When it comes to financial institutions getting involved in blockchain and building smart contracts or building applications in the form of smart contracts on these smart contract protocols, well, there are things out there like RoboCoins, DAI, which are fantastic and definitely get way more participation than a fiat-backed coin. But when they thrive on volatility, they're always going up or below or above $1. It's not really a sound place to put your money or to think of as, well, this is your last line of defense when you want to short something. So that's why I focused on the fiat aspect and not on the RoboCoin aspect. That to me is the bedrock of other things to be built. So the first thing you need is a stable coin to counter whatever is the native currency going on. If it's on Ethereum, that native coin is ETH itself. On Tezos, it's Tez. The system on Ethereum would be mining. The system on Tezos is baking, which is a form of staking. And there is an economy at work there on that native end as well. You can actually have a delegation service and people can delegate their Tez to you. You bake for them and then you get a fee. And that's been going on for years on Tezos. The counter element to that is the stable coins and the economies with the stable coins. Those two combined, those two together, the native element and the counter element, once those things combined, it's like, matter, antimatter, making warp drive. You can have all the trading going on. That leads to lending applications, which we're really excited about. Q1 this year, we're going to have Tezos Finance, and that'll be like Compound or Aave for Tezos. So in a sense, I feel like everything is kind of leading up to that because you need all these other base elements to get there. And likewise, the future, we can always talk about derivatives, which is just an endless conversation, which could go on for, it's endless. You can do derivatives now, but to me, the scalable sound way of doing derivatives is to make sure that you have a scaled lending system first that goes on variable rates. That's what Tezfin is. That's what Compound is. That's what Aave is, or part of Aave is. And then we subsequently, later this year, we'll be introducing Tezos bonds, so Tezos bond. And those would be the fixed rate interest rates lending platform. And from there, there's just a world of derivatives that can be built, which will just go on and on and on and on. So right now, these days, we're just concerned with making that sound bedrock so that developers can have what they need to move forward. And also with the other part of what StableTech does or what StableTech is owned by is actually the Tezos Stablecoin Foundation. And the Tezos Stablecoin Foundation, unlike the Tezos Foundation, is exclusively focused on decentralized finance applications and building up those economies. So developers and entrepreneurs will have another foundation for which grants can be applied, which would be a source of resources and expertise in the world of decentralized finance, stablecoins, and all the applications that can be built on it. The presence of that and the Tezos Foundation itself, I feel will be a great place for Tezos overall and a great place for the overall DeFi economy. I feel like this is like a regular spiel I go by, but we've had such interesting news this week in the stablecoin front, on the just the DeFi front, politically, just crypto crossing $1 trillion. So we got to get to all these topics. But yeah. So I'll hand it off to Lewis to.
Well, sure. Now, so where are you in terms of deploying growing the stablecoin?
For USD Tez?
Yes.
So yeah, USD Tez launched back in May.
Yeah.
We didn't really start scaling anything until the first, we had a stablecoin, but we didn't have a marketplace for it. So that came September 30th. So we've had basically 3 months of activity, and every month the volume has been doubling, except this month actually we hit our new all-time high yesterday for a month. Our monthly all-time high. So in 1 week, we did the volume that we had in all of December.
Which was
so
what
that's
was the volume? What volume was that?
Oh, it's very humble. So we're at 250,000 at this point, I believe. So I'm projecting about somewhere 1 million if this pace keeps up. But I'll tell you, everything's ahead of schedule. I thought our growth would be a lot slower than this, but
So
I see
the
the
250,000 in the stable in USD Tez outstanding.
That's the volume. In terms of actual liquidity, I think it's even more humble. It's 160,000, something like that. But we also launched ETH Tez, which is coming up to par with the AUM with the USD Tez. That growth has been a lot faster. Also, I should mention that marketplace that did open, that is the first Tezos decentralized exchange, and that's called Dexter Exchange. That's not ours. Camel Case built that. And that launched September 30th. So we needed that. We had this decentralized option, but we needed the decentralized marketplace. Yeah, the Tezos community has taken to it greatly, and now we're expanding towards other areas. Obviously, this is pale in comparison by far compared to what the market leaders on Tezos trading are doing, which is like Binance and whatnot, where it's $20–30 million a day. But we'll get there. I think we'll be very, very competitive come a year from now. Mark my words.
And Kevin, when you were designing the stablecoin, who did you get inspiration from?
Oh, everywhere. I think when you start the process, especially with stablecoins, there are so many ideas. There are two competing schools. There's the fiat-backed school. There's the algorithmic, just purely crypto-backed school. And then you learn about the motivations why certain coins go down some direction, like Maker, DAI, that kind of thing. Why does Tether and USDC go a different direction? We're the ones that have certain regulatory licenses and those that have others. It's not just about how the thing is designed, but also how is custody managed? Is it managed? Can you do stuff with it? Can you not? And there's such a trigonometry to the thing that it takes time. And the model that is implemented now, it's iterated from where I had it a few months prior, which was iterated from where I had it a few months before that. So things adapt, and as you learn more, you take those inspirations and just looking at the history of stablecoins and the market activity, and then your brain compresses, goes into new area, rethinks new things. Those neurons compress, and then you go into a new area. Yeah. So I think the important thing is also if you are someone going into anything decentralized finance applications, it's okay to iterate. It's not, no one's expecting you to chisel something in stone and just leave it like that. Or I think it's good to get inspiration, but also make sure just you're going in through so much of it that it's really just you're going to a new territory, because this stuff also changes very fast. The landscape changes fast.
So how long now have you been working in Tezos?
Oh, I'd like to say over 2 years since I'm like, okay, this is what we're doing full time.
And how has it evolved? How has it evolved in that time?
Wonderfully. I think the challenges that we faced were just proving what we said was going to happen from the very beginning, which is that we could get to a point of having decentralized global governance that we could sustain as a united community, that we can avoid the hard forks. And we did all of that. And from there, I think, it's really just about scaling. at this point. And I'd say to those that are like, well, look at Ethereum, they're leading the way. It's like, what's the old adage, the cliche of like, oh, well, we're not all using Friendster. Yeah, that's true. But also, it's like their first mover advantage is a myth. Statistically, it's not the first mover who wins. The strongest part about the first mover advantage concept is that people buy into that that term. It's actually the second, third, fourth, fifth mover, because the first mover does the hard work of just acclimating a market, bringing in something new, bringing in the resources, training the talent. But once that money gets into crypto, once people are doing the DeFi stuff, well, then it's about like, well, here's something else just right next to it on the same, shelf in the supermarket. As long as you're consuming that product, it's much easier to bring them over to an alternative. And I think the best thing right now, which is also just a really great thing to shine for Tezos, is that, especially with ETH, and I think that's why we're scaling with it so fast, is that the gas fees on Ethereum. So, people can trade ETH on Tezos, same price, it's the same price. So, I mean, that's the market price. It's an AMM, so that the market is ultimately balancing it out to the same price. But you get to avoid all the gas fees. And I think this is particularly attractive if that's what you do, is trade ETH all day or largely, or if you just trade ETH to power everything else you do on Ethereum DeFi. Well, why are you, there's a paradox there. It's like, I want the ETH, I want to do the trading because it's so valuable, but because it's so valuable, any gains I could make are mitigated by these gas costs. So now there's an alternative valve. Here's an option to come in and try it out in a way that, it's a little bit different. It's basically the same thing. Instead of using a MetaMask wallet, you should use Thanos wallet or Beacon or Galleon or Magma on mobile. It's not too far away from what people are already used to. So I think that's another reason for why we're scaling so quickly.
Okay, terrific. Well, thanks for that, Kevin, and thanks for sticking around for the Q&A. And with that, hopefully that wasn't too much ETH bashing for you, Lewis.
No, it's all good. I'm not an L1 maximalist. I used to work for the IOTA Foundation, who was building a kind of a machine first layer one. So I've just kind of switched over to Ethereum in the last couple of months. So I find it interesting to learn about different L1s. There's so many of them these days, but it's exciting to see that that you've got kind of this governance first chain as well, like focusing on building together rather than everyone kind of in their little corners fighting for like their market share and
that's good too,
against
though.
each other.
That's good too, though.
Yeah.
We always have that kind of duality. It's like iOS and Android. You got your Coke, you got your Pepsi. But really, I mean, I think in tech, it's the united ecosystem versus the one that's perpetually fragmenting. The fragmenting one sounds bad, but it actually brings a lot more innovation because you have all this. Just in biomimicry, you can bring that as an example. It's like genetic diversity. You're not going to get the genetic biodiversity unless you have that level of fragmentation. But then ultimately, you said about united ecosystem.
Yeah, I don't imagine like humans would look the way they are if a committee designed them. So I think it's good that we have all these little, evolutionary fragments popping off.
Cool. Well, welcome, Lewis. I'm excited to hear about empty set dollar.
Yeah. So
control the screen.
Sweet. So I'll just quickly share my screen. Sorry, Zoom is very interesting. It had a hissy fit earlier, but yeah. So I will need to allow it to share my screen. But basically, yeah, I've been involved in empty set dollar for a few months now. I randomly was reading through a Twitter feed one day and found the post. So I had a presentation that I wanted to share and I can share with later, but I'll need to exit out of Zoom apparently because of the control settings on my Mac. So if I need to share my screen, but I'll talk through the presentation anyway. Yeah, empty set dollar. So empty set dollar is an algorithmic stablecoin. I know that the Tezos guys call them robo-coins, but for this sake, I'll call them a stablecoin. And so ESD was built to be kind of the reserve currency of decentralized finance. And so it's a bit myopic to say decentralized finance because it's kind of only operating on Ethereum at the moment, and there's many other chains doing stuff. But So what do we mean by stablecoin, reserve, and decentralized finance? So stablecoin is, we have various different flavors. Some of them are fiat-backed and are pegged. Some of them use the over-collateralization method, and some of them are the new ones, stuff like basis and frax and things like that, use kind of under-collateralized. And so they all try and maintain some form of stability. Some of them are really focused on tightly following the peg, and some others are even uncorrelated, and they're there to just kind of be a hedge against volatility. In terms of a reserve currency, so the idea for ESD is that it is this decentralized thing that you would use as a volatility hedge behind all the activities that you do with decentralized finance, so whether that be lending, borrowing, fixed insurance markets, things like that. You can have this boring token that is going to have a relatively stable value, and that will be able to be there when you want it, if you want it. And then in terms of decentralized finance, talking about this wonderful growing ecosystem of all of these different financial primitives that are being put together on these different blockchains to kind of take out that trusted layer between you and your money, whether that be a bank, whether that be an exchange, anything like that. And so how does ESD kind of get to that vision? So there's three main components. The first is decentralization. So when you look at fiat-backed stablecoins, there is a level of centralization there. You have money in a bank account, and then its token is issued on top of that, and you can go back and redeem it at any time. And those are the most stable, that have the tightest pegs, because you can easily arb them, and there's no issue there. Then you have these over-collateralized ones. They've been around for years. MakerDAO is the biggest. You've also got SUSD from Synthetics. And you look at the kind of history of them. You have events like Black Thursday, and you can kind of see some of the issues starting to pop up. And so that model is interesting, but it's also quite capital inefficient as well. So you have that volatility risk, but also you have the capital sitting there if you want to have this stable hedge somewhere. And so this new model that's kind of come out and is kind of taking DeFi by storm a little bit, not for the good reasons, is this kind of algorithmic stablecoin where you have under-collateralized token that uses incentives or a set of rules to be able to manipulate the system in such that it stays around or near a peg or smooths out volatility. And then so that's kind of the three main types that you have at the moment. And so ESD is this under-collateralized version. At the moment, it has zero collateral, but the community is evolving and changing. They're looking at different ways to maintain the peg and see how we can kind of progress from where we started 4 months ago. And with ESD, you have this interesting dichotomy between decentralization but also composability. You see other tokens out there like Ample that have this rebase mechanism that changes the balances in all accounts, which is an interesting kind of attempt at a base money. But the problem that you have is when you have humans involved, they like to, they open their wallet, they see 20 USD, and they're like, okay, cool, I've got 20, and tomorrow I open my wallet and I have 5 less because I spent 5, not because the number that I have in my wallet changed. Sure, the purchasing power is the same, but people are fickle, and they've grown up in a system where you have these fixed amounts in your bank accounts or in your wallets. So with ESD, you have the decentralization and an elastic supply, but you don't have a forced rebase mechanism on the users. So you have a kind of a standard ERC20 token that you can put into different contracts and use as you normally would an ERC20 token, which gives it some interesting properties. So you've got decentralization, without the need for collateral, nothing that can be seized or stopped. You've got composability in the sense that there's no funky rebase mechanisms or anything. And then you've got this incentive mechanism that is meant to hold or move around the peg in a way that smooths out volatility. And so if you look at kind of the way ESD has kind of progressed, it started with zero supply, and it's moved up to, I think, a $300 million market cap at the moment. We have, I think maybe 5,000 to 10,000 community members on Telegram, on Discord, on Twitter, and things like that. And it's interesting to see that something which is meant to be as boring as a stable coin is able to capture the attention of a lot of different people. And as I said before, it's capturing attention, but maybe not for the right reasons. And at the moment, those reasons are kind of speculation. And so, the ESD is currently in its bootstrapping phase. How do you get people excited about something which is meant to stay roughly the same price, especially in a market like this where you have yield farming and liquidity mining programs and all this type of stuff? You need to be able to bootstrap a community. And so one of the things that was quite interesting that the Empty Set Dollar team did was they brought together a group of influencers and developers in the early days of the project through the advance mechanism that they had to progress the protocol and the inflation rate, and they captured a large number of developers and people who were interested in building this stable coin and having it go for the long term. And then, as it kind of progressed and people heard about it, the speculation took over, and we've kind of seen these swings and these cycles that have happened since. So, we've had 3 different expansion and contraction cycles, each one slightly less aggressive than the previous one. And we're kind of slowly moving towards, getting close to that peg. But, for a project that, is only 4 months old, we've had less volatility than something like Ample. And I know Ample isn't purely focused on stability, but they've been running for a few years, and this mechanism of trying to stay around that $1 peg, we've managed to be able to do something similar in a much shorter time, and we're seeing the amplitude decrease, which is quite exciting. So I think that ESD is an interesting project, and it's not like we're at our final state. We're kind of progressing forward and trying to bring new people in, new ideas, and see if we can get this idea of a truly decentralized stable reserve that can be used, throughout decentralized finance.
So thanks for that, Lewis. So in the time now that you've been live, what have kind of been the main learnings?
Yeah, it's quite hard to hold a peg, especially when you're doing something with algorithmic stables. We've seen multiple different models come out. You've seen different seigniorage coins and things like that. And you've also seen systems that have, under collateralization with reserves and stuff like that. And ESD is kind of unique in the sense that it has that single token system. So, in other seigniorage coins, you have, the stable coin, and then you have these shares that issue the seigniorage, and you can sell them off as you kind of go above peg and push that price back down. But with ESD, you have the single token, and it's been quite volatile as it's progressed. But we're slowly getting back to peg, and we've had about 13 or 14 different governance proposals come through, voted on by the community. The protocol has been decentralized since day one, on-chain governance from the very, very start. And all of these different tweaks were kind of in pursuit of dampening these peaks and troughs and moving us towards the peg. So it's not like, this is a set and forget thing. It's a protocol that's kind of evolving and reacting to the community that's around it. Initially there was a really quite high inflation rate, and the community as a whole didn't say, okay, let's just put our foot on the pedal more and try and make some money. No, we reduced that and tried to soften these different reflexive measures on either side of the peg, and we're slowly moving towards kind of where we want to be as this long-term volatility hedge.
And same question that I asked Kevin. Who do you think, and why don't you tell also the story of the founding of Empty Set Dollar and who the founders are, and who do you think they got inspiration from? Yeah,
so the Empty Set Dollar protocol was built by the Empty Set Squad, which are a group of, apparently they're a group, but I've only ever talked to one of them, a group of pseudonymous founders who are active in the community still. They kind of manage the GitHub and do stuff around, but they're a team that wrote the white paper, wrote the code, launched it, and kind of put it out into the world. And so the reason that they're anonymous is for a few different reasons. When you look at Basis, the kind of the protocol that came in 2018, that almost launched, they had 100 million in backing, and they were going to create this amazing stable coin, but that never got to market. It was backed by all these big VCs, but the legal team said, maybe you should kind of stay off this. That there might be some lashback, some blowback on you at the end of this. So they cancelled and they refunded everyone their money. And so the ESD was kind of the first redo of basis with some tweaks, going to a single token system and having, no VC backing or anything like that. And so it was launched, I think it was like August 25th, and back last year, and was kind of shared amongst the Twitter sphere and on Medium and stuff, and people got involved and started to kind of run with the protocol.
And you mentioned at the start, I think kind of the tagline is that you want to be the stablecoin for the DeFi world.
Yep.
What are the properties of that? When you think about this is what the DeFi world needs.
Yeah, so I mean, I think the core of it is decentralization, right? Like it's kind of that first word, decentralized finance. And so, I think at the moment, DeFi is a bit of a misnomer. We have all of these, smart contracts and platforms and things that you interact with that are, running on these trustless ledgers. But in reality, most of it is on USDT, USDC, and most of that can be censored or blacklisted. And this is something that kind of the community understands and accepts. That this isn't kind of a shock to anyone. But the idea that someday regulation will catch up, and they will say, hey, you're not actually allowed to run a derivatives platform without my permission, or you're not able to do all of these different things. And at that point, the USDC clearly lists their blacklisting process and for what reasons they'll do so. Not so much with Tether, that's kind of a bit more of a black box. But with that, there's going to be guidance coming out in the future, and these regulated stablecoins are going to have to take action because they're going to be forced to take action, not that they would want to do so themselves. And hopefully, the regulation is light, and the lobbying groups that are in DC and around the rest of the world are able to reason with and kind of show the value of these systems and kind of work something out where we're able to kind of coexist. But I think, one of the core elements for ESD is that we want to actually be this decentralized reserve currency, because at the moment, what's out there isn't really what is in the ethos of decentralized finance.
Who do you think that? Who do you think you're competing with in terms of decentralized? For that, to be the stablecoin of DeFi.
Yeah, I mean, I think it's interesting. Like there's a pretty big design space at the moment in terms of all these people coming out with competing, algorithmic stablecoins. Lots of different chains working on different stuff. I think some of the interesting ones are stuff like RAI, which is not particularly a stable coin. It's kind of like a volatility damped single collateral token that's over collateralized, which is a good design choice or interesting for what that is.
But isn't RAI? But RAI is supposed to be the main collateral, and it's low volatility collateral for the Metacoin stablecoin, right?
Right. Yeah, it's interesting with all of these like composable base monies that are coming out, like things like Ample as well. So yeah,
I agree with you. By the way, I think that's a super interesting. I'm kind of an Amin Soleimani fanboy. So
yeah, no, me too.
Yeah, super interesting.
Yeah, so you have things that are kind of not tracked. We have them kind of floating and dampening, and then you have other tokens that are kind of going after that peg. And I think a lot of this question comes up a bit where people are like, okay, so you've got this whole design space of new financial primitives, but you're looking to replicate the US dollar. They've printed 22% of the total supply in the last year. Like what are you doing? Why would you want to replicate that? And it comes back to that question, right? Like humans work with fiat. That's how we're wired. That's how we've worked for the last couple of hundred years or however. We have this kind of way of operating in the way we do our mental maths, and so I think if we want people to kind of adopt this, not just the technical people like us, but people who are mom and pops or people who have savings or people who don't do anything technical, they need to be able to understand the unit of account within the system. And if we tell them that it's something that is unpegged and it is unrelated to anything that they're used to, I think it's going to be a hard sell. So I think there is a place for these decentralized fiat currencies tokens that exist on these chains. But I think in the end, looking at something more like these uncorrelated assets, things that follow volatility dampening rather than a peg would be the way to go. And that's might be the direction of ESD in the future. But at the moment we're focusing on this USD peg.
Makes sense. Have you heard just in terms of other algorithmic stable coins that would like to be the stablecoin of DeFi. Have you heard of CoinFlex?
I haven't actually.
I'm sorry?
I haven't.
You haven't. Okay, it's just
Yeah.
look it up. They're out of Hong Kong.
Okay.
Yeah, an interesting project. One of the things I think this is going to be $1 trillion market in the next 2 years, right? If we continue to grow at the growth rate we're there in like a year and a half. So I think there's plenty of room for lots of different stable coins offering different kinds of properties for people. And now we're going to open up for questions from the audience. And so if you have questions, why don't you put them into the chat, or you can chat me directly. Okay, so let's see. Our first, I've got to reclaim the host. There we go. And our first question is going to come from Lori. So Lori, you're now presented. You're now a panelist.
Hi, thank you. My question's for both speakers. Can you discuss how your governance of your stablecoin for each of you? Thank you.
Yeah,
we didn't get too much into that. Thanks for that, Lori.
Yeah, so for USD Tez and ETH Tez, all of the stablecoins are under, first of all, a family of assets called StableTez, Tezos stablecoin, StableTez. So you go to StableTez.com if you want to see all of that. It's to be governed by the SABS token, which is a diminutive of the word StableTez. Stay with me. And so the SABS token, and most of that is going to come to those who are actually participating within the ecosystem. So people who provide liquidity, or those who lock up their coins for the sake of the system, and for some kind of a growth within that economy in itself. In, I guess, the traditional finance world, you can call it savings or CD, stuff like that. I hesitate to use the word vault or lock it up in a safe or something, because not just because of I think obvious reasons, but also because those terms are floated around so much. Just like staking is thrown around so much in DeFi that you don't even really know what it means depending on the context. But participation in the system, I think that's been a great way of distributing the governance tokens. It's deserved. It's the people who have the most interest in the success of that asset, because they're obviously doing something to make it that much better. That's what helps you avoid pump and dumps, which is something that I think, especially more than anything else, more than the assets themselves, but the governance tokens, we should be considering just very, very highly. Because we haven't even, this is all starting now. We've scaled so much, but it just also feels like, wow, nobody even knows yet that this is already really exploding. On some level, I think that even just government, this is a little bit of a tangent, but the government lawmakers that are now more accepting of stablecoins because of the guidance we've had this week on it, on some level, I feel like some of the lawmakers are ahead of the curve, because they're like, oh, this is exploding. This could actually save the American economy in 2021. Yeah, maybe we shouldn't overregulate. Maybe we should actually let this thrive and grow, just like we did in the 90s with the internet, with the perspective of the government. But would not completely just run hog wild. I mean, there's guidance there, and definitely that's not the end of it. But I think a responsible fashion going forward in this, learning from the governance decisions of the past that worked, learning from those that did not work, that's the way forward. And not necessarily forcing something so specific from the outset, from a white paper. There's something very, it's the governance should, I think, when it's designed, needs to show how can this government constantly self-correct and improve itself based on the ideals of decentralization and just an ownership society and all that goodness. Not so much like, here's how you run everything from now until the very end, forever. Because for some reason, even before any of this launched and before there was any activity, somehow I or we figured it out. Like, we know exactly what's going to happen. No, it evolves over time. The US government evolved over time. The Articles of Confederation was a test net for the American Constitution. We don't ever think about that, but it was. you know?
Right.
I think there's a good example, like with the people dictating and building these governance tokens and not actually kind of thinking them through too much. I think the Uniswap one is an interesting example where SushiSwap forked them and then they had this governance token, and the Uniswap team could have waited a couple more months to think it through a little bit more. But we had this situation where a group of users via a contract were kind of taken, their tokens were kind of not given to them because they didn't fit this specific criteria. And so there was this governance vote to reimburse them and all this type of stuff, but they never met quorum because they distributed all these tokens to all these users who honestly didn't care. They used it once or twice with these dead accounts, and they gave this governance token away, and then they hamstrung themselves by the fact that they couldn't actually get enough votes to continue. And so I think governance is kind of, especially when you're building a decentralized protocol, is a very, very core aspect that you need to focus on. And to jump into my answer would be, with ESD, the white paper kind of doesn't resemble what we have now. It was a starting point, and where we are now, we have all of these different mechanisms and updates, and it's expressed directly via code. So if you want to change the ESD protocol, you write exactly what you want to happen, you publish that onto the network, and you say, hey, let's vote on this. We've got 3 days, nine epochs to be able to cast your vote on this. We need 20% of the votes to be able to work this. And then if it succeeds, we replace the contract with the new one that was just written. And so we've had a number of these run through. We've created a community treasury that we can fund grants with. We've updated locking periods, changed times, fiddled with the knobs to make sure that we can get to our goal of being a bit more stable of a stable coin. And in that respect, I think that you can't have this market view of like we know best, we built the perfect protocol, because reality comes and hits you in the face, especially when you have billions of dollars flying around in these markets. So governance is kind of this core thing that we need to focus on, especially when we're building these financial primitives, stable coins and lending markets, AMMs, things like that, because they are going to be the layer of what comes next, what comes in the next 2 to 3 years.
Thank you.
I also want to add that, so for SAB's governance, so just like with anything, any StableTech governance platform and its governance token, we're modeling and learning from Tezos on-chain governance, because that's the tried and true method. That's self-amending in itself. So going down that route, and obviously the first people who will be entering probably the government's platform for SABs would be coming and hailing from the Tezos on-chain governance. So
have you had much of an interaction much of a chance to interact with Arthur or Kathleen Brightman, the founders of Tezos?
Yeah. Arthur and I talked to him the other day, mostly online here and there, calls a few times, met him in New York. Yeah. This is a very busy guy, but I feel very fortunate that, we get to chat once in a while.
Yeah, he's a super nice guy. Did you come to the Crypto Mondays in New York, which I founded and run, was the event at night, the party. So I got to do a fireside chat with Arthur, and I'm a big fan. I'd seen him at the previous Tezos conference in Paris as well. He's and I'm a big fan of both his and Kathleen's.
Yeah. The way he thinks is just like, it's like, wow. Can I just rewind our conversation like a video and just I need to digest that a bit more. But yeah, he's very humble too. That's the other thing that's understated about him. He's just a very humble guy, and I think that reflects in the model as well. It's not, because we can't say that about every smart contract platform, that it doesn't kind of revolve around the center thoughts of a single individual. But even if they claim otherwise, no, I'm not saying one in particular. It's probably but he came into it knowing, like, look, sometimes I'll have part of the answer, sometimes I'll have the answer, sometimes I'll be totally wrong, but ultimately the community is better when it's collective minds from all over the world participating.
That's a community, yeah. But Lori, thanks for the question.
Thank you.
And so I'm going to ask the next question. What if you guys look out 2021, and Lewis, we'll start with you. What do you think is going to be the biggest news in stable coins?
I think, and this is a bit of a pessimist's view, I think that hopefully the new administration will be able to have some, be able to stop the kind of midnight rulemaking that's been happening. in these last couple of weeks with the FinCEN stuff. But I think hopefully there won't be too much heavy-handed regulation, and I think that there will be one or two laws in a few of the larger countries that will accidentally or intentionally kind of try and stifle this industry, because you kind of have this immense power to be able to transact millions of dollars around the world without anyone being able to have a say in it. And I think that the existing power structures losing control of that is something that they're quite scared of. So this is something that I see coming, and I hope that we're able to kind of go on the education path and change minds about this before it's too late and we stifle what it could be.
Okay, thanks. Kevin?
As I said, I think that stablecoins in 2021 will save the American economy, therefore the world. But really, I mean that. Just look at the numbers. I mean, it's incredible how much it's grown, and this is just the beginning. So yeah, I mean, at a time when we're worried about so many other sectors of our economy, and this is something that's just thriving and growing like just shooting like a rocket. It's like, yeah, why not encourage more of that? Why not let it help and finance businesses? Why not let it extend to the traditional financial institutions, which are a bit worried about this and that? But also, I mean, I feel encouraged by the guidance that came out this week. It's not the end of it, but I think it's a good start. It's a good step in the right direction. I didn't read too much into what came out in early December. I mean, the thing about our, the American government system, I mean, that's the lame duck session of the lame duck session. I mean, it's if you're pushing like some proposal to December 2020 before Congress goes into recess and every bill is just dead by the time the holidays show up. Yeah, you're just stuffing it till then. You're not taking it seriously. You're not taking the bills. You're just putting it out there to put it out there. That's Congress.
Yeah, that's Congress.
I am glad though that it was. I will say this: that it was put out there. Not to say it was like, oh, it's a waste of paper, but like we had the conversation. It was a global conversation, and I think that feedback ultimately did help the lawmaking process.
Cool. So. Next question I'll ask on the regulatory front, whenever I start hearing about that, also I think that brings us pretty quickly to central bank digital currencies. Lewis, I don't know to the degree you've spent time following anything that's going on in the world, but it really looks like China is going to be the first significant country out there with a central bank digital currency. Any thoughts on what the impact of that might be?
Yeah, I mean, I've kind of always held the view that there will always, governments need a way for you to pay taxes to them. So, if the means of payments turn digital, they're going to have a digital currency for you to be able to pay. And so CBDCs kind of seem like the kind of natural progression, right? They have the traditional payment infrastructure, and if they can kind of replicate that without as much effort and oversight, or not oversight, without as much coordination and effort, then I think that makes a lot of sense. It's much more efficient, and they're able to control it probably a lot more finely. But I think that the kind of issues come with the how do they bake in the privacy? I think when you look at something like China's digital RMB project, whatever they're doing, that becomes a concern, right? You have privacy as this central focus that needs to be kind of preserved, and I think that's baked into a number of different constitutions around the world. But I think it's easy for regulators to be like, oh well, we could just have this one thing that we will never abuse and only use in situations where we have warrants or whatever, and I think that's a kind of dangerous path to go down. But even like in Andorra, I was looking. I was shared a draft of the legislation that's coming in here, and they flat out banned privacy tokens. They were like, no Zcash, nothing, no mixes, no anything. And I responded. I was like, no, I use mixes kind of like every other week, so I can fund accounts that I don't do governance actions on and stuff like this, because I have a right to privacy as an individual. And the way that these systems work is that if someone's able to find one of my addresses, then they know all of my addresses and the network that follows with that, and that makes me a target or it doesn't. But there shouldn't be this kind of focus on enforcement first at the peril of privacy. I think that's something that needs to be kind of continually looked at.
Well, thanks for that. Kevin, any thoughts on CBDCs and China's in particular?
Yeah, I think it'll come down to what are our goals with this and what are their goals with it. I think for a user standpoint, we're just like, okay, well, any currency, especially from a government, it's the transparency. We want transparency. And I always find this paradox in crypto communities. It's like, or just in crypto conversation, it's like, we want transparency. Everybody's got to be transparent. If you're not transparent enough, go to hell. Be more transparent, but not for the individual. But for the individual, it's the opposite. Privacy. No one can know. No, it's like, and at some point you go from the point of the individual to the group, to the enterprise, to the government, and you're expected that when you interact with others that are beyond a single individual, that your transparency would continue to increase. So to me, that's the more curious question. And if governments are willing to relinquish the bit of protection and buffer they've had by doing things in a back room sometimes, often, for the sake of having a consistent standard that ultimately those that would analyze their reserves say, okay, yeah, we can track every number, we know where it comes from, and therefore we say that your system is more sound, and your credit is that much better, and your standard is that much stronger, and therefore your economy is better. Are they willing to give up that bit of insulation that they've had? So I think I'm waiting for the point that we're going to stop saying CBDC, central bank digital currency, and start breaking that down into a more refined framework and viewing the different implementations that different governments have taken. Then we can start looking at it a bit more carefully and saying, okay, well, I like this, I don't like this, change that. And I think the global crypto community will be the most influential factor in all of that, because we'll be the loudest voices and the most meaningful, complex voices in the discourse.
One of the things I think is quite interesting there as well is the fact that, if you have the ability to have this kind of bearer asset that's issued by a government, like how do they interact with other non-sovereign type financial instruments? Are you able to take, Australian dollar coin and put it into Compound or something like that? Surely not, right? Like, I think that would have some issue with that. But and what are the mechanisms to bridge the world of finance that we have here, like decentralized finance, and the sovereign kind of version of that? I think that's going to be an interesting kind of. It's going to be built up over time, and the intricacies of that will be quite interesting. But at some point, there's going to be some friction, which should be interesting.
So you don't think that Maker's going to allow you to take your Chinese CBDC and use it as collateral?
Well, I don't think that China will allow it. Like, in the sense that I don't think they're issuing any of these tokens to foreigners at the moment. I think you have to have your passport and everything, and it's only for you. Because as a way to project power, like being able to kind of mint this new global money, I think that's pretty scary from like the US perspective, right? Like if China went whole hog on this and started utilizing it all across Africa and stuff like that, that'd be quite interesting. But I think the US would probably need to catch up at that point. But I think that there's going to be controls definitely on who uses it and how it's used, and the mechanisms to kind of blacklist or report it.
Yeah, I mean, I don't know if you're familiar with China's Road and Belt Initiative.
Yeah, a little bit.
Yeah, but I mean, again, I don't know anything. I'm not a Chinese expert other than, I visited there twice last year, Crypto Monday, Shanghai Rocks. And I was just completely blown away by how functional, like how much things work, how the, WePay is like incredible. WeChat, WePay, just everything, boom, boom, boom. With the Road and Belt Initiative, I mean, it seems to me that, that they will use pretty quickly, use the digital CBDC to drive all, that whole initiative and get more people all around. Easy way for them to get governments, all around the world, and people all around the world leveraging it. So thanks you guys a lot. We always finish up the show. You really appreciate you guys coming and spending the time with us. And we always finish up, giving you guys an opportunity just to, to talk about, real quick how, kind of the one thing folks should remember about your stablecoin and how, how you suggest people get involved if they want to get involved. And Kevin, why don't we start with you?
Yeah, so you can go to usdtz.com or ethtz.io to check out our different stablecoins. To see all the stablecoins, go to StableTez.com. And to see all the projects, including Tezos Finance, Tezos Exchange, Tezex, which will have a cool Tezex bridge going from ERC20 to FA Tezos tokens, coming out next week, we hope, that you can go to stable.tech and just see everything. But yeah, and you can follow me on Twitter at KMEHRABI.
Okay, cool. Thanks, Kevin. Lewis?
Yeah, thanks for listening to me ramble for 40 minutes. Yeah, if you're interested in getting more involved in the ESD community and seeing what's possible with these types of algo coins, you can go to emptyset.finance. You can find us on Twitter at emptyset$. Or you can go to my personal website, which is esd.tools, and I'm linked in there as my Twitter feed.
And just real quick, because I will say this, because I think you've got an interesting story, right? How long? Wait, tell everybody how you got your job and how long you've been there.
Well, yeah. So I joined the Ethereum community I think it was early August, and then I found ESD, and then I recently quit my job. I think beginning of December, and I'm now kind of working for the DAO. Doing stuff around the community, integrations, governance, things like that. Kind of jack of all trades, master of none. Hopefully I provide value and am able to kind of continue to foster the community in the way that I've done prior.
Right, but there's a proposal, and I guess it was, they
on-chain governance. Oh no, not on-chain. It was off-chain, but
it was an attractive compensation package, right? I mean, they want to get really talented people to come and be part of the project.
Yeah, no, it's quite weird. We have this world. It's you don't need to kind of physically be in an office anymore. Especially with COVID and stuff like that. The talent is global, and so if you provide value to a community like Kevin is doing, and we're able to kind of just be present and work from wherever we are in the world on these protocols that are mind-bending to normal people.
So I got to tell you, they're mind-bending to me, and I'm here, 24/7. And so with that, again, thanks guys for participating. Thanks everybody's out there. We've got the Stablecoins Are Killing It episode number 26 next week. Actually, we're having CoinFlex. So I suggest, if you want to come hear another algorithmic stablecoin that wants to be the stablecoin of DeFi talk, they're in Asia, focused, they're headquartered in Hong Kong. Company's been around a couple of years. They've kind of had a pretty significant pivot. But it should be a great show. See everybody then. Thanks.
Gotcha.
Thank you.